Hello guys, hello, welcome back. Um, Today we keep on talking about technical analysis, and there's a particular pattern that we can meet very frequently in everyday market, and on which today I want to focus, because becoming, we can say, a black belt in recognizing this pattern could really simplify your way of trading considerably. Okay, so as you will see, the market often and willingly moves in a predetermined and predictable way when you know its dynamics. So this is a traditional pattern that many traders know and use in their trading activity. I want you to make one thing very clear. The pattern I will show to you now is not obviously the result of my studies. Okay, so this is, I will not consider this one as my strategy, my own strategy. Okay, but to be honest, maybe it could be, because I have spent the last few years focusing on this pattern and combining price action, another tool that I will tell you about later in the next videos, and a strict money management. I assure you that this video could already be enough over time to be profitable on the market every day. Okay, well, let's talk about pattern. You have surely already heard about it. Someone called it ABCD pattern or 1-5 pattern. On my point of view, the best way to call it, because it is part of a big theory. The real name is Elliott wave. You know that I'm not good with names, but anyway, it's a movement that I consider, after a long time, I discovered after a long time, and only later I was able to be I found out that this is a part of a lot of theories, and okay, it was just a confirm. But for this reason, I wanted to rename it. So let's see what it exactly is. Let me give you an example. The idea behind this pattern is very simple. After an impulse, most of the time, price makes a channel. Okay, a channel which can be just a retracement, in this case, just a correction before resuming the main trend. Okay, and this is a channel. Okay, another option, impulse, price can make a consolidation. So another channel which represented the final strength before changing the trend. And this is a channel. I'm sorry. We will see a few examples later, and you will realize that graphs are not obviously so pure, okay, but most of the time price make this kind of movement. So which are the rules behind this kind of pattern? Sorry, let me first start with this one. We can call it impulse up and channel down. So for example, when you have an impulse, and I think you already know what an impulse is, must be a very long candle, a very huge candle made by volumes. Okay, so after a long candle we have a channel. And then price move, resuming the main trend. Okay, this is a channel. So the theory, the rules behind is that most of the time price make 1, 2, 3, 4, 5. Okay, 5 movements. 1, 2, 3, 4, 5. Okay, the rules behind that is that obviously the channel must be a correction, so must be the trend of the channel must be opposite to the main trend. Okay, so lower high and lower lows. So the 0 point, which is this one, let me take another color. The 0 point was must be above the 2, the point number 2. So this is the 0, must be above the 2, that must be above the point 4. Same things for the lowers, the lows, sorry. 1 must be above 3, that must be above 5. Okay, so for example, this impulse, if we have a channel like this, okay, there's no value no more, because this is a higher high. Okay, so this is very important, that the channel must be confirmed. Obviously a channel could be also this one. Okay, so this is a channel, but also this one. So not so, sorry, it's not a very good drawing, but as you can see, as I told you before, the graph are not so pure. Okay, let me remove drawings. So impulse up, channel down always means a continuation of the main trend. 0, 1, 2, 3, 4 and 5. Okay, at 0.5 we can go long, mainly. The other example, we have 4 examples, so vice versa, impulse down, channel up, and then price resuming the main trend. Here we have channel, okay, and this is the movements, 5 movements, okay. When we will speak about Fibonacci tool, we will see how could be easier, okay, find the number 5 to go long, to go short, to open the trade mainly, okay, and we will see where take profit it will be, okay. So when the channel is opposite to the impulse, this is meaning that price will resuming the main trend. There will be opposite as well to the channel. Vice versa, the other two examples, the other two kinds of patterns, impulse up, channel up, okay. In this case, as I told you before, means that the price changes trend, and this is a channel. Same thing if we have impulse down and channel down, means that price will change the trend, and this is a channel, okay. How do we draw the 0.5 point? The 0 in this case, so when channel is in the same direction of the impulse, the 0 point must be at the beginning of the impulse. So not here, not at the beginning of the channel, as when we have impulse down and channel up. So when we have channel opposite to the impulse, but we have 0 here. 1, 2, 3, 4 and 5. Same thing here. 1, 2, 3, 4, 5. At the 0.5 we open a trade. Okay. Which are the rules? In this case, obviously, higher highs and higher lows. In this case, lower highs and lower lows. Okay, so 0.3 must be beyond 0.1, 0.5 must be beyond 0.3, Point 3 must be above point 1 and point 5 must be above point 3. Okay, so one of the main rules, is that an impulse is required. Okay, if we don't have an impulse, this channel does not have sense for this theory. Okay, does not have sense and does not have sense. An impulse is required. Okay, and most of the times an impulse is generated from a consolidation, after a consolidation period, okay, or in a supply zone or in demand zone in a structure. Now let's move on the reality, and you will see how this kind of movement works in the market, and you will easily recognize that the graph part is not so pure. Okay, it's not clear as you see in this example. We are on Euro USD on the daily time frame, but as you will see, this kind of pattern you can find it in all the time frame. As I always say, the higher the time frame are, the more reliable, the more profitable the patterns will be. Okay, because in the lower time frame there are a lot of traps, a lot of manipulations, a lot of rumors, a lot of dirty. Okay, so let's go. I want you to show how this pattern works on the reality, because there are so many variations okay, of this pattern. So why there are so many variations? Because market movers, institutionals know that this is one of the most profitable patterns, and so they want to make it dirty. Okay, they want to use their traps also in this pattern. So I will show you now how to how you have to try to understand what traps and manipulations are, and how to fight against. Okay, so as you can see, impulse down, channel down. So 0, 1, 2, this is 1, okay, or this is 1, 2, 3, 4 and 5. Okay, from point 5 you can open your long position. So I'm sure you're just wondering why this is 5 and not this one. This is manipulations. Okay, if you see this example, institutional know that you open your long here, okay, and you put a stop loss here, okay, and so price retest and then goes up, okay, with hitting your stop loss, okay. But you can avoid this kind of traps if you use a huge stop loss, a larger stop loss, okay, 2 pips, 3 pips below the lower low, okay. In this case, the target, and not only in this case, will be the 0.4. Why? Because there are so many cases that once 0.4 reached, market turn down again, so make this kind of movement, okay. Okay, let's move on. This is an impulse, so impulse up, channel down. Look at this example. This is a triangle, okay. So this will be, as I told you, it's not so pure, okay. The channel can be could have also this shape, okay. So impulse up, channel down, so the 0 is here, 1, this point, 2, 3, 4, okay, and then people wait for 5 here. But as you can see, 0.5, it would be too nearest, too close, okay, to 0.3 in terms on the vertical terms, for which you can use Fibonacci from 0 to 1, and you will never open a trade above, in this case when it's uptrend, above the 27 of Fibo, okay. But if you don't want to use Fibo, you can simply look for a structure. Where is a structure? Let me clean this one, sorry. Where is a structure? When this kind of candles, when price makes these kind of candles, okay. So this here, this is a structure, okay, in this doji, and as you can see here, you can go long, okay, with this kind of stop loss, and target 0.4, always 0.4. You have also to be sure that your risk to reward ratio would be enough for you, okay. So in this case 1.34, okay. So again, this is an impulse, so sorry, this is an impulse, okay. The previous channel was an impulse, so 0, 1, 2, 3, 4, 5, same thing. Fibo from 0 to 1, as you can see, we will be talking about, okay, we'll be talking about Fibo, but as you can see, from 61 to 78 of Fibo, it will be a very good zone, to a very good level from which open your trade. And as you can see, sorry, this, it was, with this candle, it was a very good structure. In fact, from here, price moved down. Target 0.4. So here, stop loss. Stop loss will be here, so this is not good for us, okay? Because risk reward is lower than 1. Usually the risk reward will be at least 1 to 2. Okay, so you invest 10 to have 20. Okay, let's move again. Here we have impulse up, impulse up, channel up. So this is 0, 1, 2, 3, 4 and 5. As you can see here, the channel is not so clear, but it's absolutely a normal thing. Okay, don't look for a clean, completely clean candlestick patterns. It's almost impossible to find them. Okay, so we can go short here, more or less. The stop loss, it will be here, more or less. Okay, and take profit here. But if you want to, here you can move your stop loss to entry when 0.4 is reached. If 0.4 is too close to the entry, and then let the trade run. Okay. This could be another one good example that I forgot to highlight. 3, 4, 5. Okay. So impulse down, channel up. Sorry, impulse down, channel up, and this is a channel. Sorry. As you can see, this is a strange channel. This is not two parallel lines, but it's absolutely what you have to look for. Something strange. Okay, but this is not strange. This is the market. There's no problem. Okay. Here we have impulse down, impulse up, channel down. But this is not a very good partner that we're looking for, because as you can see, 0.4 is not reaching. Okay, so move on. Impulse down, channel down. So 0, 1, 2, 3, 4. Why 5 is here and not here? You have to look for the answer. Maybe this is very difficult here. Yes, more or less, because this is a good structure area. Okay, it's not so clear. It's not so clear. I know this, but this is how we have to play the game. Let's use your Fibonacci for another help. So from 0 to 1. In this case we have now 0.5 on the 61. Okay, so we have to wait, and as you can see at the 1.618 of Fibo we have a good structure, so this could be a good level to open a long trade. Let's move on. Here, impulse down, channel up. Oh, this is an old analysis, okay? I didn't do it now. We are in 2012. Okay, so I usually don't remove my analysis because I like to leave on the graph and sometimes look behind, look backward, and see how was the my analysis in the past. In this case we have impulse down, channel up, so 0.0, 1, 2, 3, 4, 5. How we know that 5 is here and not here? Because we take Fibonacci from 0 to 1 and we see that it could be it could be here also, and this is good structure as well, so maybe this one could be stop loss, but no problem, happens. Okay, let me see why here, because it's not so clear. Bah, I don't know. Market is stronger than us. This is what we have to always keep in mind. Impulse down, channel down, so 0, 1, 2, 3, 4, and 5. Long here. Why here? Because here it's a very good structure, as you can see. Long here. Stop loss will be 2 pips below the structure, and 0.4 is our target. Maybe this is another channel. Let me see. Here, this is a very good one. Impulse down, channel up. So it's 0, 1, 2, 3, 4, and we have to wait for 5. Okay, this is a very good example. As you can see, you have not to wait here for 4. I mean, the important thing is that not that the channel, the trend line is respected. Okay, the important thing is that 0.4 in this case, it will be above 0.2. Okay, well, as you can see, let's take another structure here, maybe this one. Not too high, okay, doesn't matter about. As you can see, 1, 2, 3, 4.5, it will be here. 1.5, when market will is turning, okay, it's changing it's changing, sorry, its trend before 0.5 or too close at 0.3, it means that obviously the movement will be so much stronger of what we suppose, because market varies. Okay, so it needs to change immediately. So it doesn't have time to reach 0.5, as in this case. Okay, and there's so many other cases in which we will see. We have here something quite similar to a triple top, where this maybe will be the neckline, or maybe this is double top, just one or two. Okay, anyway, a good with this neckline. Anyway, a good pattern by which we can think that market will turn, and that what price actually do, retest, and then we can go short. Let's move on. Impulse up, channel down, so 0 here, 1, 2, 3, 4 and 5. As you can see here, same thing, 0.5 is above 0.3, and sometimes it happens. Okay, it will never happen with 0.1 and 0.3. I mean, 0.3 in a downtrend channel has always to be below 0.1. Okay, if it's not below, it's not 0.3. So we can open here along. Why here? Because here we have a structure. Perfect. Stop loss here and 0.4 for the take profit. Like this example. Okay, so this we have, look at this. We have an impulse. Sorry. We have an impulse. Then market started to make the channel. So channel down and impulse up. So we have 0, 1, 2, 3. Sorry, yes, impulse up and channel down. 0, 1, 2, 3. The 0.4 I expect here. Okay, but markets go here. So this is not channel anymore. At least will be a channel like this. I mean, a triangle. Okay, so in this case it was the same, huh? 1, 2, 3, and then market broke this channel and go down. This will be a channel as well, and in the lower time frame you can easily see something like that. Okay, 1, 2, 3, 4, 5. This is impulse down and channel up, so is 0, 1, 2, 3, 4 and 5. 0.5 did not touch this trend line, but it doesn't matter. Okay, the important thing is that 0.3 is above 0.1, and to be honest, the 0.5 would be this one. Okay, this is a very good manipulation, if you see, because here, sorry, this is a consolidation. Okay, then market gives us a good signal, so broke this structured zone. Okay, retested and go down again, and so here we see perfect. Now market will go here. Instead, market went up. Okay, this is stop loss hunting, and then finally it moves down. As stop loss hunted, market goes down. Okay, so in this case, it will be how can we avoid this loss? Moving, if we open here the trade, okay, on the retest of this structure, the stop loss will be here and the take profit will be 1-to ratio, risk reward ratio. So here, as price make this kind of movement and break also this support, okay, we can move stop loss to entry. Okay, then when price retest the level, we market takes us out of the trade, but without a loss. Okay, impulse up, channel down, 0, 1, 2, 3, 4 and 5 as well. This, it will be good as well. This is triangle. Okay, when you see this kind of formation, it means that sellers are very, very powerful, and so their power wants for the trend to go down. Okay, so we have to wait the triangle to be broken and re-enter on the retest. Okay, as in this case, this very, very huge pin bar, it's stop loss hunting. Why? Because people enter here with stop loss here. Okay, how can we avoid? Moving stop loss to the highest line, to the higher high, sorry. Okay, and the risk reward too. So here, it's not so easy to do this. I know, but this is the game. This is how we have to play the game. This is a channel as well. So here in this time frame, maybe it's not easy to see, but we have our pattern as well. Also here, price always make the same pattern, always make the same 5 movements. Okay, in this case, impulse up, channel down. This is an impulse down, channel up. So 0, 1, 2, 3, 4, 5, and then goes up. Impulse down, channel up. So it's 0, 1, 2, 3, 4, 5, and then goes down. Impulse down, channel down. Where is the channel? Is here. and so market play like this his game 0 1 2 3 4 and 5, and then goes up. Same thing. Impulse down, channel up. Okay, so 0 1 2 3 4 and 5. Okay, always make this kind of movement. This is a very long channel. Impulse up 1 2 3 4 5. Look at this. This is a very good example, because channel in the channels. Okay, so we have a very big channel on the daily time frame, and on the lower time frame we have a lot of other conformations, a lot of other patterns. Impulse down, channel down, impulse up, channel up. So market will go down, and this is a structure conformation. Okay, maybe here we can move on lower time frame, but it will be clear. So like this, impulse down, channel up. So market will go down again. Okay, I know that it is not so easy to find this pattern, and you have to improve your way to trading. You have to keep on train, and again and again and again, day after day, and I can guarantee you that this pattern will be so useful once you are skilled. Okay, you are skilled. I just want to show you another example that is quite often visible. If we have impulse, sometimes market make this kind of movement. Okay, this is an expanded triangle. Expanded triangle. Okay, we have to behave like impulse down, channel down. So 0 1 2 3 4 and 5. Okay, here is our entry, and our target will always be 0.4. Fibonacci is a useful tool that we can use. Okay, remember that this zone from 0.5 to 78 is always good. Okay, the best level is 61, but we will talk later in the next videos. Okay, you can open a short position from here as well. Okay, with the stop loss beyond above 2 pips from the last higher low, higher high. Okay, and take profit if you take Fibonacci from the entry, sorry, to the 0.5, sorry, to the 0.5 to entry. This, the 61 of Fibo, it's a good take profit. Okay, but the condition is that trend line must be hit. Okay, so in this pattern, this expanding triangle, we could have 2 possible entries, one at 0.5 and one here on the touch of the trend line. Okay, I just want to highlight one important thing you need to know to recognize and use this kind of pattern at your best. We already spoke about patterns inside patterns. Okay, so for example, when we have an impulse, okay, for example, impulse up, channel up, so we have 0, 1, 2, 3, 4, 5, and then price goes down 2.4. Okay, it's really important that you recognize this kind of patterns. I mean, in the correction, most part of the times, price make another pattern here, another channel. Okay, so the whole pattern is impulse up and channel up, but this is impulse up, channel down. So we have a pattern in the pattern. Okay, 1, 2, 3, 4, and 5. Same thing here. Impulse. Impulse down, impulse up, channel down as well. So 1, 2, 3, 4, and 5. Okay, sorry. 1, 2, 3, 4. Sorry. Okay. 1, 2, 3, 4, and 5. Okay. Another thing you need to know, same pattern. So impulse up, channel up. Okay. As we saw before, sometimes pattern is not complete, and sometimes number 5 is below 0.3. Okay, which is also the same confirmation of double top, for example. Okay, a very good way to understand when 0.5 will not complete, will not be above 0.3 is that is recognizing a pattern here. So impulse down, channel up. So as you can see, as you will see a pattern here, you will know that probably the 0.5 of this pattern cannot be here. Okay, cannot be here. Why you will know that? Because you can use Fibonacci and wait for the 161%, okay, and you will know that here probably it will be a structure, okay. As you can see all these patterns with the lower time frame. This is a normal movement of the market in all the time frame. So on the day time frame you will see a very big movement, but try to look for the same pattern on the lower time frames. Okay, this is very important because it will help you to understand, to make all the market movement more predictable. With the next video session, we will talk about Fibonacci. You will be able to make this pattern more comfortable for you, okay? Because I know that is not easy. It's not easy. But I repeat, you have to train yourself. You have to train your eye, okay? Because most of my profit, okay, was made by this pattern, okay? So train a lot, because it's very important that you at the end will recognize this kind of pattern.